What's going on, everybody? It has been a while since I've made a video, but with good reason. I've been doing a lot of work in the background to bring some incredible educational material out and to try to take people from zero to hero in the fastest way as I possibly can with some high level information, some high level day trading strategies, scalping strategies, swing strategies, and all that stuff's going to be coming out soon. But it's got to be curated the way I want to. I'm a little bit of a perfectionist. And I really want everyone to have the best content that I've ever seen. And I've taken a lot of courses, watched countless of hours of YouTube videos. I've had my own mentors over the past 10 years. And I am trying to put all of this down into the most simplest way, so everyone who's, no matter where you are in your journey, you're able to digest this information and really change your lives with it. But today I want to make a quick video and going over the Tesla trade that I had posted. But also, I'm going to be making daily videos here very, very soon. I had a situation here which is about to end, which is going to complete my basic live streaming and studio area. So my setup is almost done and I'll be ready and back to making some amazing video content for you guys. And just like this one. So I'm going to be doing trades of the week or maybe trades of the day. Every once in a while, I'll be going over trades and basically doing trade recap videos for y'all so you can understand a little bit better what I'm doing, since my style of trading is more about smart money concepts and order flow trading. It can get a little complicated, but it's just like riding a bike. Once you learn it and once you practice it, it very well becomes easier and easier. So let's dive into the chart. And I had a question from Pudgy Penguin, I believe it was, about this Tesla trade. And he was asking, did I enter in on the 30-minute? And basically, how do I enter in these trades? When I have all these levels on my chart and you see me make these little doodles like this means something. What I'm trying to doodle out here is market structure coming down into our zone. You see a market structure shift and you have that break of structure and retest. And that is how I enter my trades in a conservative method. But I have many more ways to enter a trade than just that. Oftentimes you see me post this screen, which is book maps. And I also use Market Monkey. Now I've used many other order flow software. And this is going to go over many people's heads. So I'm not going to go over this, as this is a very advanced method and it's going to be in one of the advanced courses coming out soon. So getting back to the Tesla trade, we were eyeballing this zone. And why were we looking at this zone? Well, we had our range here, which you can see our high of this range was at the tip top there. And we have the low of the range and we pull our range tool. And yes, I'll be teaching all about the basics of using the range tool very, very soon. But basically we see that we are at the bottom of the range, which is a really, really nice location. Furthermore, we have a range that starts at the bottom and comes to the top. So this will be your local range. So we are at the bottom of two different ranges, which is a really, really significant point. Again, I will be going over greater detail and why and how and all the things very, very soon. But why was this a special level? This order block with imbalance that actually led to a gap in the market structure, left behind a series of lows here, this low here, and this low here. And what do we know about lows? Well, if someone were to long here, or long here, where's your stop loss going to go? At first, the people that long here are going to put your stop loss here. The people that long here may put your stop loss here or here. People that long here are going to put your stop loss here or here. But as price moves up, anybody who longed here will more than likely start moving your stop loss up and up and up with structure, or maybe you're moving it along trend lines, or you're moving it along EMAs, SMAs, or VWAP, or what have you. There's many different ways to do it. But what this SFP line here is why it's significant is we understand, since we have a lot of liquidity under these lows, meaning stop losses, we have liquidation events that can happen here. And what do we know about liquidation events? That they can lead to a big surge in price after these people are liquidated out of their long positions. So that's exactly why I look for swing failure patterns into an area of demand. And this area of demand is a special type of demand. It's what I call an order block with an imbalance. Now, let's get a little bit into how we entered, now that you know why this area was a little bit more special than others. So the question was framed, did I enter in on the 30-minute? No. If I'm watching the 30-minute, I'm usually using as a guide or as a higher time frame for scalps and day trades. Now, it's going to be different for everyone, but more often than not, I am looking at the daily, the 4 hour, the 30, the 15, and the 5. And sometimes I only look at the 1 hour and the 5-minute. It just all depends on the structure that is created, the range and how wide it is, and more and more and more. There's a lot to go through, but I did not enter this on the 15-minute, even though, the 30-minute, even though you could have. And how could you have entered in on the 30-minute? Well, you see that this is actually the 930 candle. That means this is New York open. So that is something else that is telling us that, hey, we are coming into a point of interest right at the New York open. And I don't know if you know, but the New York open has a blast of money, a blast of liquidity that it usually happens at that time of 9:30, and you can even say 9:30 to 10:30. So the first way you could have traded this on the 30-minute is once you breach this SFP, meaning you breach this low, and then the candle moves all the way back up and closes above this SFP low, that is confirmation of your SFP. So you absolutely could have opened your trade here. Because since this is a blue candle or a bullish candle, this would have been your close. This was the open, this was the low, closed here, high here. So you could have pulled the trigger here or on the open of the very next candle. That is not my style of trading because I like very precise trades. Why? Because I don't want a massive stop loss. This type of stop loss, if we would have put it at the wick, that stop loss would have been 2%. If we would have put it below the order block, it would have been 2.6% stop loss. I don't trade in that style of trading. I like very, very small stop losses, which allows me to put even more money on the trade. And most of the time, exponentially more money on the trade, which then opens the trade up to a much higher risk to reward ratio. So getting back to the entry, how would we refine this entry down for it to be one of my refined entries to achieve just that? Let's go down to the 15. What I like to do is if I'm looking on the 30-minute, I just simply roll down my time frames to see and wait for what I want to see. And let's get back to the doodle that I always like to draw. And this here is what we're looking for if you're going to use market structure for a break and retest. However, that is not the aggressive way to enter. Using order flow is one of my number one ways to enter trades. And that is a very, very aggressive entry. And that allows me to take an entry right down here in these wicks and then put my stop loss here. And once price moves away, I immediately de-risk the trade for a free trade and start moving my stop loss up with price. So this is how I make money on scalps, day trades, or scalps that turn into swing trades. Now we're on the 5 minute. We don't have any structure worth noting. So we have to keep going down. Since we left this gap is also considered an imbalance. So if we understand auction market theory and how markets move, we understand that markets move from balance, a range, to imbalances, which are expansions or impulses away from the range. And anytime we have an imbalance in the market likes to come back and fill this area to rebalance the market. Meaning that if we have a gap, you expect price to come back up to here and fill this entire imbalance or this entire gap. So now that we have this down here as our point of interest to long or to buy and take a trade from, we now know that we have a higher probability of even coming back up to here to take profit. And not only that, but even to the highs of the range. So now that we are on our 3 minute time frame, we still don't have much structure here, but we have enough. And how do I map this out as structure? We have your low, and we have the last previous high. We break this low as we open up, leaving that gap. And then we take our next high to this low and then to the next high, which is followed by this low. So that is the map of the market structure on the 3 minute. However, I did not take it in that way. We go down to the 2 minute. You start to see a little bit more structure. You start to see these candles separate out, which gives you a little bit more to work with. However, you have to be a skilled trader the lower time frame you go, because the lower the time frames, the more market structure can flip flop back around from bullish to bearish, bearish to bullish. But here we have some very, very strong indications. Number one, we gap down in the open. Number two, we hit our point of interest. Three, we've already had our first tap or bounce off of the VWAP after losing it. And then you have a second tap of that VWAP. So any point within here, 1, 2, and 3, you could have used any of these to enter in on. Let's go down to the 1. Let's work our way down. The 1 minute doesn't really show us anything else special than what we've already seen. So I want to go to the 30-second. I want to see a little bit more microstructure to work with. And we get that microstructure now. What do I mean by that? We are able to see a clear break of structure from this high here. And we have that first up move. We break this low. But then right after that, instead of coming up to go down to continue the downtrend, we have the break up above this previous high. And now we have that break and back test. The doodle that I always mark out in these zones. You should be able to see that now. This is what I do in every one of my zones because it holds significance of a market structure shift. When you enter a zone, you break structure, indicating that the downtrend is over and we are having a reversal. We break that structure and then we retest and go. Now, this retest was a very, very nice retest. If we go back here in the 3 minute, we see as we break away, you had that break and retest here. So you could have entered in right here at VWAP. That would have been a great entry. And you enter in here, put your stop loss here. Once price bounces away and you break structure again, move your stop loss here or here. I personally would have moved it here because VWAP also acts as a nice level of support, especially in stocks or any big asset that has heavy institutional involvement, big money. And what do we see here that the 3 minute left behind? The 3 minute left behind an order block with imbalance. This is the type of demand that I use, and it's the only type of demand I use. So now we had this refined entry on the 3 minute, as well as confluence with our VWAP. So this is exactly where you could have entered and placed your stop loss. And then you take it up. That is a 8R trade. What does that mean? If you risked $100 on this trade, meaning if you hit this stop loss right here where you set it, you would lose $100. But if you hit your target, like this target here, you would make 8 times that. So you would make $800. To reiterate that, you are risking $100 to make $800. So that is how you can enter a trade refining your zones. The market structure itself is your confirmation to enter. The break and retest is your confirmation to enter. What else can we use? I already told you that I use this, but it's highly advanced. So let's use my favorite indicator that I haven't talked a whole lot about yet, but I have a little bit here and there. And it's no different than using most other indicators, like the RSI, for example. You would just go down on a lower time frame, whatever suits this style of move. And you can see that even on the 30-second time frame, and we'll actually show a few different versions of this divergence for the confirmation. You're looking for price to head down. Let's make that a little brighter. And you can see your momentum wave heading up. This is your classic regular divergence. Okay, what do we see on the 15-second? Again, I'm always flickering between different time frames to see how many time frames give us alignment for this confirmation. You can see here that we also had that very local divergence. And even if you entered here, you could have seen that we made a hidden bullish divergence from here to here, which is your continuation confirmation. Now let's go back to the 3 minutes. Where are we here? So now that I showed you examples of the local divergence, you should most of the times also be able to zoom back out and see that we have a bigger divergence forming on the charts. So this is on the 3 minute time frame. Point one, point two. Price is coming down into our level, our point of interest that we've already told that has great significance for a level of a bounce or a reversal. And we see the divergence as we come into that level. But not only do we see a divergence in the market cipher B momentum waves, we also see that divergence in money flow. The gray to blue money flow is moving up, meaning money is moving into the market. And again, it is very important to understand that this is all happening at the New York Open when a lot of money comes into the market. So you are looking for decisive movement at that time. If it's not a decisive move and you get price action like this and it's just kind of going back and down, chopping, that's not the move you really want. You want to move just like this. You have clean structure, bouncing away from your point of interest rather fast and bouncing off of VWAP and pulling away really hard. Let's go to 5 minute. 5 minute showing us the same thing. It even shows you another version of that continuation in bullish divergence. Let's go to the 10 minute. You're still having the same thing on the 10 minute. And let me reiterate, the higher the time frames, the more likely things are going to work in your favor, meaning market structure is more significant, your confirmations are more significant. Let's go to the 10 minute. 10 minute is the exact same. 15 minute, the exact same. So let's go to the 30 minute. We have a clear divergence. But if you wait for the 30-minute divergence, it does not confirm until this candle. So you have, if you want to get in early and have that refined entry, and you're basing it using off market structure with these as a confluence of confirmations, you're going to have to flicker through different time frames on your lower time frames to get that style of entry. It's not for everyone. And let me tell you, you need to back test this first over 100 times, then practice it using demo trading, paper trading over 100 times before you try this live with real money. And that's where I will leave you off today. And I hope to see you soon. I'll be posting more amazing setups in the Discord and posting daily videos instead of just screenshots and a bunch of descriptions and words. Talk to you all later.